Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, you have a big smile on your face because we have reason to cheer given the fact that yesterday we saw gains fizzling out, but today a good triple-digit move on the index, and we managed to cruise along throughout the day. 24,600 back on the charts, but we haven't really been able to make a dash at yesterday's swing high of 24,702. So we were within that range that we saw yesterday, but still nothing to complain about given the fact that quite a few reasons to cheer. First of all, the global markets were very upbeat and buoyant. Wall Street clocking in record close last night. There are renewed bets of a Fed rate cut in September. Asian markets also following suit, with Nikkei extending its record run, even Hang Seng Shanghai clocking in great gains, and European markets also looking in fine fettle. So our markets, we did have global cues, that were strong, but also domestically earnings that came out in the last leg of this earnings season have been pretty good. The likes of Apollo Hospitals, Hindalco, also the kind of commentary they have given for the future found favor with the street. You also have all these new age companies, those were the flavor of the day today. Nykaa, Honasa, Paytm, all of them, clocking in solid gains. So yes, reasons to cheer today. And autos, metals, pharma, these were some of the movers yesterday. Today as well, all these sectors managed to extend those gains. In fact, very strong gains coming in for pharma pack, for the metal pack as well, and even autos clocking in gains of somewhere around 1% or thereabouts. Broader markets were faring much better than the headline indices. You had the NSE advanced decline ratio also almost 3:2. On the NSE, and if you look at some of the sectors that didn't do all that well, FMCG was out of favor today as well. And PSU banks, have lost some bit of momentum over the last couple of sessions. So that pocket was also out of favor. In terms of gainers, Apollo Hospitals, fresh 52-week high there. Hindalco, Dr. Reddy's, Cipla, Hero Motocorp, these are some of the movers. On the flip side, IndusInd Bank, Adani Ports, Titan, ITC and Ultratech were some of the laggards. But Yatin, a lot of results coming out in the last leg of the earnings season. We had plenty of reactions to that. And we also had some of those companies that didn't report great set of numbers still getting punished, like PG Electroplast for that matter.
Yeah, clearly. So, today at least the market breadth was much better, Nandita. Obviously, tomorrow is the weekly expiry on the Bombay Stock Exchange. So, let's see how the markets shape up because, yes, the volatility will continue. But the advanced decline ratio was better today, almost 3:2. And if you look at the mid and small cap indices, 0.5% plus gains coming in for both of these indices. JM Financial post the numbers has seen a 15% momentum today. We have NMDC Steel also showing a turnaround in the quarterly numbers. That stock hit a 20% upper circuit, and HBL Engineering post the numbers continues to rally 10% up today. Apollo Hospitals also 8%, one of the top FNO gainers. We'll talk about that stock in detail. What was not doing well is PGEL and SJVN. After some gains yesterday, both these stocks gave up gains, falling by nearly 5% each. DB Realty and Wari were the other stocks in the front line to lose steam. But yes, stock specific action continues on Dalal Street. We have stocks like Fortis, HBL Engineering, Apollo Hospital, GVTND hitting 52-week highs. So yes, stock specific action continues, and clearly the focus this time is earning instead of focusing on the global developments, which obviously will play a role on the market per se, but stock specific action really is now determined by the numbers in the quarter.
That's true, Yatin. And yesterday we were talking about Hindalco, how the India business has fared much better than Novelis, its US arm. But a commentary coming in from the management, which fired up the stock today.
Correct.
Take us through what the management has to say.
Yeah. So 2-3 things, Nandita. First is the entire metal index of the top gaining sector in trade today, almost 2 percentage points higher. We have the China US 90-day pause coming in, which is clearly helping the metal pack. Hindalco management commentary was also strong. The management said that the copper and aluminum spreads moving forward should be much better in shape. There is no, backing off from capex plans. The expansion plans continue as they were, despite the geopolitical headwinds, especially on commodity stocks. And for Novelis, the important commentary here is the margins have bottomed in the first quarter itself. Moving forward, scrap prices, which are a key raw material for Novelis, there we have seen some cooling off. Probably in the second half, Novelis could see much better margins, and also, the capex is on track. So, both on the domestic front and on the Novelis front, the commentary was quite solid. Post with the stock saw a rally of nearly 6%, making Hindalco one of the top gainers on the Nifty today.
That's true, and some of the brokerages had also pointed out yesterday that on the Novelis front, things may have bottomed out, and fourth quarter of FY26 is when profitability will start to improve, and coupled with good commentary coming in from the management itself, we've seen the stock clocking in a strong rally in today's session. But the flavor of the day was clearly fashion and beauty, Yatin. We saw shares of Honasa and Nykaa clock in good gains, 5%, in excess of 5% for both the counters. Numbers were good for both of them. Let's take you through Honasa first. Profit was up somewhere around 3%. You saw revenues grow 8%. EBITDA margin, on a quarter-on-quarter for Honasa grew over 260 basis points, and that was or the sequential improvement in EBITDA margin came in despite the impact on sunscreens on the back of an early arrival of the monsoon. So this is something that has found favor with the street as well. They took note of the fact that EBITDA margin have improved despite the impact of early monsoons. Now, focus categories, the likes of face wash, shampoo, sunscreen, moisturizer, which make up 80% of the sales, saw double-digit growth, and the management is confident that it will sustain the double-digit growth in the focus categories going forward as well. For the younger brands, they continue to deliver good 20% kind of growth as well. Now, Mamaearth, that is the key, portfolio or a key brand for Honasa, continues to see improvement. It is the biggest brand, of course, in the Honasa portfolio. Aside of that, the company has also said that it is looking at 7% margin for FY26 with 100 to 150 basis point improvement each year annually for the next 4 to 5 years. Now, this has also found favor with the street. We've had some of the brokerages like CLSA who've upgraded the stock to outperform. Target price here has been raised to 333 rupees per share. They've also, noted the fact that EBITDA margin managed to beat estimates on a quarter-on-quarter basis, and they like the margin guidance of 7%. They've raised that FY26 to FY28 earnings estimate by anywhere between 15 to 26%. Now, Jefferies has also raised their EBITDA estimate by 3 to 11%. They've maintained their buy rating with a target price of 400 rupees, and they maintain that Honasa remains a high risk, high reward play. Some of the risks that the company will be staring at is heightened competition, execution miss, and of course a low success in the scale up that they are planning to do for their own brands. I want to say the stock has done well, but it is still below the IPO price of 324, correct, right? And if you look at the performance on a YTD basis, it has given positive returns, but since Feb, the stock is up 45% since the February lows. So yes, the stock has done well, gaining traction, but it is still below the IPO price, and it has a long way to go before it really shoots up and comes back to its 52-week highs. But the other stock that I have on my radar is Nykaa.
I think on the analysis point of view, if you look at the presentation, I think Nykaa was much better than Honasa. Honasa was a flat number. I think Nykaa did much better, and obviously you have the details, but the headline numbers I think were much stronger for Nykaa.
Yeah, because they have their GMV growth of somewhere around 26% or thereabouts. That also of course bode well for the company. Also, on an annualized basis, the gross merchandise value for businesses across platforms, for Nykaa platforms, was in excess of $2 billion. So that also, of course, does add glamour to Nykaa's numbers. Beauty business continues to add glamour. It continues to gain market share when it comes to beauty business, and also the fact that it has also seen acceleration in its fashion business, which of course it has been struggling to break even there, but it has given a guidance that the fashion business will attain break even by the end of FY26. Aside of that, if you look at the commentary coming in from the management, they've said that the quick commerce business Nykaa Now, which has launched in 7 cities, they are aiming to scale it in metros as well. Margins are of course seen at mid-single digits in FY28, and there are some big marquee launches that are planned in the second half of FY26 that will also bode well for the company. But overall, they've said that the house of brands of Nykaa brands has better margin than the overall business, and here the gross merchandise value is up 70% on a year-on-year basis, and they are targeting a 6,000 crore rupee top line growth for house of brands with near 20% margin in the next 5 years. So all this commentary as well found favor with the street. Nomura, in fact, although things are looking pretty hunky-dory, and
Correct.
you can take the liberty of saying the numbers are pretty beautiful, but Nomura has maintained its neutral rating, and they maintained their FY26, FY27 revenue estimates also at 27% and 25%, but they have cut their margin estimate. They are saying that higher lease expenses are likely to weigh in on the numbers, and which is why they have also cut their EPS estimates for FY26 and FY27. But the stock near about its 52-week highs.
Yeah. So Nykaa, doing well across the board. But we have a lot of momentum boys in trade today. We also had Apollo Hospital, which was one of the top gainers in trade today, Nandita. And if you look at Apollo Hospitals, Nomura has come out with a neutral rating on the counter. 6,856 is the target, but today the stock flew off, meaning 6% higher, closed the day high. And if you look at the EBITDA, clearly much better than the expectations. And if you look at Apollo 24/7, which is a pharmacy business, there also the GMV growth was quite strong. In fact, the hospital volume growth was nearly 3%, and the average revenue per patient growth was seen at 11%. So, strong quarter for Apollo Hospitals. Occupancy is 65%. Obviously, Q1 is usually slightly slower in the monsoon season. We don't have much patients, but yes, Q1 saw a 65% kind of occupancy, and the healthcare revenues grew 19%. Margins were up nearly 41 basis points year-on-year basis. So, hospital stocks in general are doing well. We had Narayana Hrudayalaya Fortis at 52-week highs, and today Apollo Hospitals also clearly making a move in the F&O market.
They're also looking at expanding quite aggressively, right?
Yes.
They are planning to open 4 hospitals in the third and fourth quarter, which will add as much as 500 beds for the company. And the stock, of course, 8% higher, 52-week high on the charts for an Apollo hospital. But another stock, I think that they clearly belong to new age stocks. Paytm was another one that has been doing extremely well, and today, of course, it hit a fresh 52-week high as well. There's been a development, and a big development for that matter, given the fact that a big regulatory overhang is out of the way for Paytm. In fact, its unit Paytm Payment Services has gotten the RBI's in principle nod for payment aggregator license. Now, that means it has got the approval to operate as an online payment aggregator. Now, RBI has also lifted the restriction imposed in November 2022 that barred Paytm Payment Services from onboarding new merchants, though it continued to serve existing ones. It was, I think, onboarding new online merchants that was banned, and the company had, applied for a removal of the ban as well, but it was told that it has to comply with FDI norms to get that approval. And timing is also pretty interesting, right? Because just a couple of weeks ago or days ago, I think Antfin had sold its residual stake in the company as well, 5.8% stake. So now it has got the approval, but the nod is not unconditional. It has to undertake a system audit, including a cyber security one, for it to get the final approval. It has to submit that report to the RBI within 6 months starting yesterday, and once that happens, only then it will get the final nod from the RBI. Otherwise, it will lapse automatically. But if you look at some of the brokerages, they have welcomed this move. Citi has buy rating on the stock. Target price is at 12-15 rupees. Citi has said that it has, of course, this lifting of this ban has removed a key regulatory overhang. And of course, now the company can leverage its scale and product capabilities to compete more effectively going forward. Bernstein as well has an outperform rating. Target price is a little lower at 1100 rupees, but of course it has noted it's a major relief, but it also says that in the near term, the impact on metrics will be pretty much limited. In terms of onboarding of smaller merchants, it will boost the payment margin for the company as well. Of course, we know Paytm has been doing extremely well. If you look at the last 1 year performance, it has given over 2x returns. But the highest target on the street for Paytm is from Dolat Capital, I think 1400 rupees or thereabouts. That's a 20% upside potential. But yes, regulatory overhang removed, and we saw shares of Paytm also taking off, hitting a fresh 52-week high in today's session. Yatin.
Absolutely, and Paytm, 3-4% gains coming in, and I think after the Alibaba block, we have seen this approval coming in from RBI. There were earlier concerns of Chinese ownership, a lot of other things. But yes, that wallet approval still is pending from RBI. We had the FASTag, the wallet business still impacted because of RBI restrictions. Whether or not that goes through, because that will have a financial impact. This approval doesn't have a big financial impact according to brokerages, but yes, we'll watch out for the entire space, especially after Alibaba or the Chinese investors have made a move from the shares.
That's true. I think that's another key, development that one would be watching out for. Perhaps that could be a trigger for a fresh re-rating as well for the shares of Paytm. But after all those stocks that we had on our radar, we've come to the end of closing bell. Of course, have a great evening, and we'll see you tomorrow. That happens to be the last trading day for the week, because we have a long weekend. And but Independence Day is important, right? We'll be watching out for the PM speech. Perhaps he could announce some reforms in the face of the troubles that we are facing with the US in terms of tariff. And of course, we have the whole Putin and Trump meeting as well on the 15th of August. So market holiday, but important developments to be watched out for. But with that, thanks a lot for watching from me and Yatin and the entire team. Have a great evening and come back and join in tomorrow morning as well. Thank you.